After days of turmoil, China's Shanghai comp wiped out all the gains for the year. In an effort to support the markets and the economy, the People's Bank of China cut interest rates, lowered reserve requirements for banks. China economic expert at AEI, Derek Scissors, with me now. So, Derek, the Chinese government doing all it can to support the system. How alarming is it to you? Now, granted, they made these moves after market close in China, but that it didn't really carry over to others.
I think it's very difficult for it's surprising to me, frankly, that foreign markets are following Chinese markets that much because Chinese markets are rigged. And what the government is doing now is better than what it was doing before, which is just buying at 3,500 in Shanghai. It'll let the market fall through that level, and it's now cutting interest rates. That's better. I think we will see some stabilization in exchange rates in Asian markets that may help the U.S. market. So I'm not too worried about China tomorrow or the next day. I think the big puzzle here is why is China having such a big impact on the rest of the world?
Well, $17 trillion is at least one answer that comes to mind, Derek. I mean, this is a huge economy. The only other economy this big is the U.S. It would be like if somebody in the Philippines says, well, I don't know why people are paying so much attention to the U.S.
Well, except that the Chinese economy, as opposed to the stock market, has been weakening for at least 4 years, and in my opinion, more like 7 or more. That's not news. The news is the Chinese stock market weakness. In the Chinese stock market, the free float is very small. It is rigged. It was driven up by the government to levels it never should have gotten to in the first place. If you're responding to the weakening Chinese economy, you have a real worry, but it's not a new worry. The new worry is Chinese stocks, which don't really mean anything. It's not a real market.
Okay, I hear what you're saying about it being rigged, but with that in mind, that is to say the strong arm of the government, the Chinese government does seem like it's trying to pull off this kind of balancing act, right? So cutting rates, the idea being get more money flowing through the system, but at the same time trying to make sure the yuan, its currency, stays stable. Can it accomplish both goals at once? Those seem contradictory, at least to me.
Yeah, that's a good point, and that may be what a lot of people are responding to. It's not the Chinese economy being weaker, because that's old. It's the Chinese government not seeming to know what it wants to do. First, it supports the stock market, then it doesn't. It announces a devaluation of the yuan and then seems surprised when traders want to push the yuan down further. Now we have them trying to keep the yuan stable and cutting interest rates, as you just mentioned. So that may be the source of concern. It's policy inconsistency out of China. And getting back to your point about how big it is, it's like a very large, person stumbling around. They just look like they're going to bump into something, even if you're not really sure why they're doing it. It makes everybody nervous.
That is a fair point indeed, Derek Scissors. Glad to have your perspective. Thanks for joining us. China economic expert, AEI.